Hi all Inderes TV viewers. Last time we talked about Neste, there was a lot of turmoil. The times were described as the toughest times for the company. Heads were rolling, margins were suffering, and there was profit warnings in the air. Today we'll talk about the company with our analyst Petri Gostowski. Hi Petri.
Hi there.
So the company released its Q3 on the last week of October. How would you summarize the situation now compared to 5 months ago?
A lot hasn't changed actually, and if has, maybe even to the worse in terms of the renewable diesel market outlook. It's a tough environment, and we've seen it continue as a tough environment. One key factor is actually the overall economic situation. We have a downturn in the global economy. We've seen fossil diesel prices come down, which has pushed renewable sales prices even more down and puts pressure on margins. So it's a tough environment.
Yeah. Well, at that point we also discussed that the short term there are no quick solutions, but in medium and long term there is more you can do. For example, on the commercial side, you can make sure that you have better commercial contracts with your customers and you can optimize your sales, etc. Are these measures something that the company has been taking now?
I'm sure that's where the focus is, obviously. On the short term, you don't get any results, though. The big picture is the company is currently ongoing their annual negotiations for next year. We'll see the outcome, obviously, next year of those negotiations, but I'm sure there will be changes to some terms. For example, one point that they mentioned at the Q3 announcement was that the pricing, as said earlier, is of renewable is usually linked to the fossil diesel price, and that has been a big issue now, and that might be something they could be looking to change in the future.
Yeah. Well, is the key uncertainty factor the gross margin in renewable products and the current oversupply in the market?
Yeah, that is the dominant factor.
Yeah.
And in a business like this, like in most business, you can't really get away from the market situation. I mean, when you have a product that is priced on the markets and there is a lot of competition, it is the market prices that you have to take.
Yeah.
And then therefore, yeah, the big picture is that we need to wait for the market to balance it out.
Yeah. What are the other issues then how would you rank them?
Well, one key factor of the, say, past year has been the ramping up of the Singapore new line. There has been issues, there has been setbacks. Currently, they're going towards their target of the full ramp up by the end of the year. So, yeah, it looks better now. And then there's the other site at US where there was an incident and there has been repair works being done, and they're also looking at getting it fully ramped up by the end of the year. So yeah, obviously these are clearly minor issues, and you could argue that in this tough market environment, had it been a lot better if they had more volumes coming out, because it's hard to sell now. So I think the biggest thing is the overall market situation and the margin you get for the volumes.
Yeah. Well, let's talk about valuation then. Multiples are very high with this year's weak performance, and there is still long-term potential, of course. Please enlighten us on the picture and perhaps the time horizon, if possible.
Yeah, well, obviously we're looking at a low end earnings for this year in the renewables segment, and with the given with this given current market price, the valuation is high. But then what comes to expectations on the longer term, we believe that this current margin in the renewables is not sustainable. I mean, we're seeing a lot of players making losses. This can't continue forever. So I really believe that the margin will be higher in the medium term. When this will materialize, I can't say for sure. It depends obviously on like many factors. One is obviously the demand growth, how it plays out. There has been some weakness, say in the sort of say non-mandated growth, so a voluntary market growth, which is usually linked to the economic situation. But then we have the regulation that is driving the growth for the coming years. So I wouldn't expect it to be too far out in many years. But is it next year or the one after? We'll see.
Yeah. Well, lastly, what is our current recommendation and why?
We currently have an accumulate recommendation, and basically it came there what I mentioned. So if you look at our earnings expectations going to 25-26, where we expect the renewable segment to have higher earnings based on the higher margin, but then also on the volume growth, the valuation is rather low. So it's balancing between the short-term high valuation and the low longer-term valuation. But given that we do believe that the renewable diesel margin will be higher in the longer term, we are leaning towards that longer-term valuation potential.
Yeah. Thank you so much, Petri, for this summary.
Thank you.
And thank you all for watching. Remember to read more about Neste on Inderes.se, and also feel free to join discussion on the company on our discussion forum.